Welcome back to another tutorial series. Today we will start building a simple yet comprehensive CCA comps, trading multiple, or whatever you'd like to call it tool. The series focuses on building the model and explaining how multiples are calculated, used, and what the principle of relative valuation is. As nowadays nearly every professional has access to a dedicated data provider, the tool will be capable for manual and automated input utilizing any financial data provider like Capital IQ, Bloomberg, FactSet, or any provider with an Excel plugin. Although we focus on the implementation of Capital IQ, the tool can be easily adapted to other data providers. As you're aware, multiples are perhaps the most used metric to value a company. Although it seems the application of multiples is rather simple, there are many pitfalls in utilizing multiples. In case of trading multiples, it obviously starts with a selection of fitting comparable companies, followed by the correct calculation of the different metrics starting with EV and the respective KPI you're referring to. Next, the selection of the multiple itself often raises questions. You see, there are a lot of things to take care of when applying multiples. Therefore, we will also use real-world data and see how our tool works, as multiples are utilized on a broad range to get a quick indication and perhaps even more. But first we will give you a brief overview of the final model we will build in the coming weeks. So let's get started. At first we build a control sheet for basic information like input of tickers or company identifiers for your data providers, company names, peer group definition, time periods, supplementary information, exchange rates, and so on. The sheet is typically a supplementary sheet, especially if you use any financial data provider. Regarding the definition of the fields, we stick to the coloring of our integrated financial model we built in our series from 0 to LBO. The orange apricot colored fields are input fields. In addition, we introduce gray for data provider formula fields. Next, we build an input and calculation sheet to collect all necessary data utilizing a data provider and also introduce manual input fields with a switch to edit certain data points. The purpose of the sheet is to calculate and collect the key inputs for the multiple calculation, EV, and the respective profitability KPIs. In this sense, we will also explain what are the key ingredients and how these components interact with each other. And of course discuss certain pitfalls, like time selection in case of fiscal years, calendar years, and last 12 months, EV and equity bridge, exchange rates, and so on. Next, we define an analysis and output sheet to easily check the calculations and multiples. The purpose of the analysis sheet is hereby to have all multiples in one sheet and to identify any outliers or errors, which could also be related to missing data from your data provider. Therefore, we will spend some time on analyzing real-world data, troubleshooting, and sanity checks. The output sheet is simply used to provide a copy and paste basis for any presentation or whatever you need a multiple table for. In this respect, the graphs are also used for these purposes. And furthermore, we will look at some regressions using, for example, sales, growth, or margins to analyze any correlation with valuation. Last, we will include a language sheet to enable a simple translation of the whole workbook to your desired language. So in a nutshell, the focus of our series is the building of a simple valuation tool utilizing trading multiples, thereby explaining the steps and rationale behind relative valuation step by step. As a disclaimer, we will simplify certain assumptions in our series and encourage every viewer to crucially review the contents and our model. As always, valuation is maybe more an art than a science, but you need to understand the basics to find the best solution for your purpose. In this sense, enjoy the series and please let us know your views and comments on the topic and model in the comment section. If you're interested in the model, please drop us a mail to the address below. Furthermore, we highly appreciate your feedback and are grateful for any subscription or thumbs ups. So, thank you and bye bye.